Good morning, everyone. Today is Friday, October the 5th, 2012. This is Anne Marie. And what we are doing again every morning, as we have been doing, is looking at the SPY very, very quickly. Let's see what's happened. If you take a look at the StockTwits blog, you will see that I posted something on Chartly yesterday afternoon about the SPY completing something called a butterfly, which is an harmonic formation that has a tendency to have a pretty good level of accuracy. Now, here's the thing. We have an uptrending line of pricing, and the harmonic that we pointed out to is a bearish harmonic. When you see a bearish harmonic in an uptrending chart, all it's going to do is pretty much pull back into support. It does not say that you have a rollover in the chart, right? Many times we really want to study these patterns and we say, oh, there's a bearish butterfly, here's a bearish ABCD. If it's in a really bullish chart, you can have bearish patterns showing up in a bullish chart. That just means I'm coming back into support. So let's discuss that a little bit. If this butterfly extends completely, there is a chance that it can come into this 146 60-ish level, possibly even 146.79, something like that, right? We could come all the way into this area. If that's the case, then there is some more upside here in the short order for this SPY chart. However, here's what we're looking at. On a grand scheme, here's a wave. We've retraced 61.8% of this wave. This is a traditional region that many algorithms and individuals, frankly, decide they want to pull back a little bit, take some profit off of a bounce from a low like this. And what they want to do is trim just a little bit. So the chances are that we will see a little bit of a pullback here. What else might be showing that we have this potential for pullback? Well, if we want to take a look at the stochastic momentum oscillator, right? That's what this is. We have an SMI and a number of different charts. You can look at your RSI. I'm completely biased against the MACD. I find it to be not the greatest of indicators. I will use it if there's nothing else floating around. But if you are a fan of the MACD, then you should pay attention to it. I found that if you look at the MACD and you use 3, 16, and 10, you get a pretty nice formation that can hold through shorter cycles in and give you a better look at what's happening in the charts. But I digress. See how this is pulling back here? This is a drifting of momentum. This is a much faster oscillator. Same oscillator, it's an SMI oscillator, but it's moving at a faster pace and you can see all the momentum dampening. Something else, the range of motion in terms of strength to the upside is flattening, right? If I were to draw a line connecting the bottom of this candlestick to the top of this candlestick, I would have a specific slope. If I did it, say, from this candlestick to this candlestick, I can see that the momentum is waning, right? Which means I don't have accelerating pressure. This will make RSIs and SMIs sort of look a little flat in the trending zone. They begin to flatten out. Now, when something flattens out in a trending zone, it does not mean it's going to roll over. It just means that there's no acceleration left. There's still movement. Momentum still exists. It's not accelerating. It's constant. It's like you driving at 60 versus you accelerating from 60 to 75. All right? That's what I mean by acceleration right there. I'm still moving. I'm just not increasing the speed at which I move. And so that gives me a little bit of a clue that I've got sellers up here waiting for me. The second thing that I can look at is this prior level of resistance to the left here and this huge string of resistance / support that I have here. This is obviously a very important level. this 146.30-ish area. And so I am concerned that the sellers slash buyers that were sitting here are no longer here to defend the move to the upside, and instead all that are waiting here are sellers. Okay, so what's the thought? Hey, listen, non-farm payrolls are coming. We are going to have a move of some kind. If it's a dreadful number and we come all the way back down, we should fill the gap, but then we'll move to the upside. If the number is good and it pops us up, I suspect we don't pop up tremendously, but we pop up a little bit and then roll back so that we can give ourselves a little bit of a breath and have a chance to move to the upside. My bias is still to the upside in all these grand formations, not really seeing a super adverse move to the downside in the market at this juncture, but we could see something that fills this gap right here. All right, good luck trading. Pay attention to the waves. Remember, if you are long and your moving averages are sitting beneath you, cradling you, as is the VWAP here, you are probably on the right side of the trade. If you are long and sitting beneath that VWAP, beneath your major moving averages, you're probably losing money. Right? And you can see that obviously here. If I'm long here and I'm sitting under these moving averages, I'm not doing particularly well. Okay? So that's it. Have yourself a good day and a great weekend.